Hi, I'm Mark Honeybone from Property Ventures, and welcome to our weekly podcast where we interview prominent members of the investment community along with other professionals in the New Zealand property market. This is a free service from Property Ventures so that you can keep current and learn from some of the best around New Zealand. To check us out, take a look at propertyventures.co.nz. We hope you enjoy today's podcast. Welcome back to part 2 of this podcast with Hadar. That's been most enjoyable, and we will continue to talk through the property cycle, how he sees it, and some good tips on banking you'll hear. So listen, sit back and I hope you enjoy. That's great, Hadar. So we're getting around the clock then. So where are we now?
It's ticking, and you need to keep an eye on the way the market is going. A good property investor should always be monitoring the economy, the global economy, especially for example, in the United States and Europe, and for us, obviously, New Zealand and Australia. And read a lot of articles, keep current with what's going on in the world. Sometimes there are external influences who can change the economy here in New Zealand. And the slump is basically a buyer's market. It's a great time to be investing, and that's where the investors should be a little bit more greedy and less fearful. But again, you make your money when you buy, so a good deal needs to be a good deal from day one, regardless of any part of the cycle. It's a great time to be finding deals in this market via motivated sellers, real estate agents who work usually a bit harder. Whoever's left in the industry, they'll be accommodating different offers, whether it's an offer with longer settlement, due diligence, or we've seen a lot of trades, meaning somebody leaves his boat in exchange for part of the payment, and various trade-offs like that. The general real estate market is more flexible when it's a buyer's market.
Good time to be targeting mortgage auctions about this time, Hadar.
Yes, definitely, and it's a good time to be targeting. I know you guys been doing it a lot, and good on you for keep doing it now. I've done it a lot in the slump, and to be honest, I didn't have a lot of success rates with that. Again, New Zealand is a small country. That we don't have courthouse doorstep bidding like there is in America and places like that. The mortgagee sale was in some stages very, very slow. It's a good strategy, and I know you've done very well with that, you guys. So mortgagee and forced sales are good strategy in the slump. Go to auctions. If you're pre-approved and you got finance sorted, you can take advantage of good opportunities.
Yeah, I'll just talk briefly about the mortgagees, because at that time we traded a lot. And we stuck to a formula at mortgagee sales, and out of Auckland we were sometimes the only bidders, and if that happens you start calling the shots and not the bank and not the other people. So unlike lately when I've been in auctions with over 30 people bidding, it's a bit of a waste of time if you're trying to get a bargain at the time.
Yes, and that's why I'm not a big favor. I don't really do auctions because I've done a lot of them in the beginning of the recession, and I didn't really appreciate the fact that I put a lot of work and effort into doing a due diligence on a property, and spent some money and time, especially being out of town. I'm not going to fly up to look at it because somebody can just bid and just outbid me. So I'm not going to spend $1,000 to bid, to fly there, and then I can miss the deal. So it doesn't work well for me. Investing from away, unless you're really lowballing and you go really low and what will happen. But with mortgagee sellers, sometimes you buy where is as is sort of thing, and you can get in all sorts of situation. But that's a different subject again. I don't like to spend time and money on something which I didn't tie up, and I don't even know how much I'm going to pay for it. So I personally not doing it.
Yeah, it's certainly a tough one, and we had our systems of what we did and how we did it, and it's certainly not for the faint-hearted or the probably average investor, but there were certainly opportunities, that's for sure.
Yes, and you need to be a cash unconditional buyer as well, which for me, to be honest, in the slum, there's so many deals everywhere, which I don't really want to take that risk of buying unconditionally a property which I may not be able to access, and start the job and do the job. You can't get it vacant sometime, and sometime, I even in some stage when I was doing auctions, I took title insurance just to make sure all the title is right, but it's great that it's worked for you guys and all of that. But personally, it's not really my cup of tea. I find agents working very hard, and I found a lot of motivated vendors as well through direct mail marketing, like letterbox drop letters, yellow letters, and We Buy Property. My website was doing well and still doing well. And generally speaking, the agents are there to they're all very motivated to help you to find some great deals and motivated vendors, which you can buy with flexible terms and be less flexible on the price from your end, but offer them more flexible terms. That's what I targeted.
So that was your strategy through that period.
Yes, I worked with a lot of agents and private advertising, and always told everybody I'm flexible on the terms, but not on the price, as you should. The market is bottomed out. So, another thing is a great time to buy in the slump. If you're a developer and you want to do a few site subdivisions, it's a great time to be buying from land which you could develop from an upside down developers who just gone bust.
Yeah, we've seen that at close hand where we marketed a property in Tauranga from a developer who just sort of works by himself. Him and two other guys got an opportunity to go and buy a block of land from a distressed sale, and what they got out of that was they sort of paid half price for this block of land. And the good thing about that is they've been able to pass that on to the investors who are now buying it, so everyone gets a win on the way through. So then moving up to the last part of the cycle where the market starts to move and it's the right time to buy up large. What sort of key factors, Hadar, do you look for at that time so you know it is time to buy?
Two of the main things that I monitor are the properties, the time the properties take to sell. When this time is shortened, then it means that the demand is slightly increasing. And when you monitor open homes or properties which you monitor, and suddenly you see that in particular properties was selling for a certain price in certain suburbs, and suddenly they're starting to get higher prices and added, for example, another 30,000 more than the median price, and suddenly there are numbers of people coming to open homes is increasing, and the number of people attending the rooms when there is auctions in general, not just mortgagee sales. So you don't really have to buy there, to go and buy there. But if you monitor those things, you see that the sentiment is changing a little bit in the market. That's the green shoots of the economy. And you follow the local economy as well. Make sure the economy is starting to improve a little bit. Usually in the recovery, the rents are starting to go up as well. That's a very good sign. And the share market starting, after they slumped through the slump and reached the bottom in the slump, share market starting to rise. This is a very good sign of the recovery to starting. Those little things that one could spot. And more interest. The agent that you developed relationship through the slump and the recessions will tell you that there is more people in the autumn home. Suddenly there is more offers coming in, and a little bit less stale listings which stayed on the websites and real estate agents' website. Most people don't know that the market is recovering. There is a great opportunity to be held over there by coming in early and keeping an eye on the market before everybody else jumps in. And I've been active through the slump, through the recession, and through the boom. And if I would have known or understood more about counter-cycle investing, I would have been keeping my money or my deposit or my credit for the slump instead of buying in the peak of the market. But saying that, I learned a lot from it, so I'm not really looking back. But just generally, it's a great time to be held is when the market is at the bottom or just starting to recover. Think about it. If you buy a property and the market just starts recovering, you're basically going to get a free, easy capital gain coming out of it. And rents are really usually increasing within that time frame as well. So you get capital appreciation and growth in yield within that time frame, within the early recovery. Within 2 or 3 years, you can make 30% of the value of your property, which is what a lot done. You know, we've done it. Property that you hold through one cycle has gone up by a significant amount. And it's really, for me, it's like buy mode. You know, it's pretty much the time to be aggressively buying is when the market reached the bottom and it's starting to recover.
So, Hadar, at that point, which is, as you said, the most important part of it, really, when it's time to buy, how are the banks at that time? It's a different part of the market where at the height of where they're just giving money away willy-nilly. What do you have to do as an investor to prepare yourself for this? Because, as you said, it's the most important time to get great capital gains and increased rents at the same time.
Yeah, well, this is things that an astute investor should be preparing themselves when the market is good. That's what one should do in the boom. That's why I said earlier to improve your property's value and add value and work on your properties so you can go back to the bank and create yourself a big line of credit or what some called a vulture fund. So you can pick up all those bargains and all those opportunities when the market is low or at the lowest point. That's the key, and that's what I aim for. And in the next boom, even over that boom, the next boom or the next cycle, keep an eye and just keep improving and have a massive mortgage vulture funds or line of credit of, you know, a couple of millions or what have you, so you can pick up some great opportunities. The time in the slump and the recovery is, as far as the saying go, is the time to be a bit more greedy than usual, because that's where the best buys are. The people are finding it hard. The economy is not doing well. A lot of businesses are failing. There's people need to cash out their properties, and I purchased a property from a couple of business owners through the recession who needed the cash out. They had a bit of equity in it, and they needed the cash out for them to put it into their business. So, yeah, that's pretty much the best time to buy.
So, Hadar, when the boom is happening, you at that time, you're not running out there getting lending and buying up large. You're sort of getting yourself prepared for the part of the market when it's said buy, and you somehow get the bank to the stage that they will help you finance that as much as you can. At the time, is that sort of how it works for you?
Yes. So we're going back to the boom, which is a seller's market. You need to be fearful. Most of the purchasers are doing today is buying off market, buying properties which are not listed with real estate agent. Again, you offload all your unperforming properties. If you got any properties that not performing or low yield or very high in maintenance or not such a good locations, you know, it's not. I also believe in holding properties for long term, especially the buy and hold and never sell and all that. But if some properties are not performing, sell them. Get the money out in the boom, get the premium you can get for it, and get prepared for the bad times. And the banks love it. When I sold my property in Christchurch, the banks actually really appreciated that, and they see that I'm operating sensibly. And I discussed it with my mortgage broker or with my business banking manager, which is equivalent to commercial lending in the States, in some places, and they appreciate and they see that you're professional and you're monitoring the market and you're doing the moves to put yourself in a better position, and that helped me to be able to take some opportunities in the downturn.
So Hadar, let's get specific with this banking thing. Some comments you just said that people will be thinking about. Having your personal bank manager or the person you deal with all the time, obviously that's very important for anyone who's investing all the time to have that relationship. So how do you find that, and is it important for you to have that relationship?
Very, 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 very beneficial. And I think that as and I'm sorry it's like that, but I think that it's a luck of the draw if you say that. If you got a good banking manager or commercial banking manager who understands business and understands what your goals are and what you're doing, and if you can prove to them that you're a professional and you got the right information. When I went to talk to my bank, I bring reports, I bring printouts and email them informations from special sources that I use, like tenancy, which we mentioned, and I bring them a whole pro forma of all my portfolio, so they can see that you're a professional and that you can present it right, and all the information is there. So I'll give you an example. When I was trading and the bank won't lend me money, I found a great mortgage broker who managed to get me money through different banks or some private lenders, because they have a lot of options. They don't only work with one bank. They can work with 5 or 6 or 7 banks and have asset lender or private lenders and various other stuff. So many options. So that's what I've done when I got stuck. And at some stage, I reshuffled my portfolio when I sold one of the properties in Christchurch, and I dealt with the new banking manager which we had. And he's not new anymore, but he's been there for a few years now. But that was my first encounter with them. And I felt and talked to the person, and I felt that the guy understands what I'm doing, and the chemistry was there, and he was very switched on and understand real estate. And next time I needed some money or top up or line of credit, I tried him as well. If I had no luck with the mortgage broker, and it's all about relationship. If you can present yourself, and if you are professional and you do a good job, you build a relationship over time with the bank, and you show them that you are responsible, and you never miss a bit, and you pay all your credit cards on time, and you even clear your credit card debt monthly, then you build yourself, you put yourself in a position that you're establishing good track record with the banks, which is very, very important.
So what you're saying, and this is quite a common gripe amongst investors I hear, saying the relationship with the bank manager is not what it used to be, and they're going offshore and it's all done by paper, and you don't get the personal side of it anymore. So you're still saying if you present your case well, you act professional, as you're saying, the relationships are still there with the bankers.
Absolutely. And I think that a lot of people who will be starting up may feel that it's a little bit harder for them because they don't have track records. And unfortunately, track records counts a lot when somebody lends you money. And I think that a good mortgage broker who has good track records with banks as being good mortgage brokers, being doing a lot of work through the bank and channeling a lot of work through bank responsibly, could help you as well, because often they know how to present things in a way that you might not know. You might go into the meeting with your banker or whichever you meet with, mobile banking manager. And if you're starting up, you might not know how to present it properly and say the right things and get it through. So there's no foolish stick or anything going on, but somebody professional with experience how to present your offer, which you are making an offer to obtain a loan from them, you need to present yourself, will do it more professionally. I think business banking is usually easier to deal with them when you have a bit more track records. That's how I see it in my experience.
You seem to get into business banking after you have a few rental properties, and then you do start to get your own business bank manager. The other way, of course, is to go through a good broker, and they get your money from a variety of different ways, as you've already alluded to. If listeners are listening to this, if they want to go back and listen to the podcast with John Bolton, that was a great podcast and he discussed there on different ways on how to approach lenders and different ways of get lending. but a great listen from a fantastic bloke.
Yeah, he's great. I also think he's great. I tried quite a few mortgage brokers. Some of them were better than others. And when I met John and walked with him, and he was the one that I mentioned that managed to get me finance when nobody else could, and it was from a bank, from one of the main banks, and the bank kept lending me more money just because they've seen that we've done a good job, and that was even on buy and holds and trading. So I also highly recommend John, and I do refer quite a few fellow investors who find a difficulty with the banks, and it is important to be able to present things properly and professionally. And John, being one of the largest, Squirrel, being one of the largest mortgage brokers in Auckland, which is New Zealand, pretty much, are well into it. And he's an investor himself, which is the key. I like to deal with people who understand my business. You see, John is an investor himself and a developer, and he's got skin in the game. He knows that we need the money to make deal work, so he can evaluate the deal and see if there is money in it, and that's part of the key that the banker cannot do. See, John can understand it, and he could go to a private lender or even an asset lender and tell him differently than what the bank will be receptive to.
Now, this has been great today. Hey, and starting to wrap up, do you just want to talk a little bit about your mindset and how that works for you when you are buying against the tide, and you're not buying when anyone else is buying? So how's that mindset work for you, and how did you learn it, or how did you develop it?
I'm quite a cautious person, so I like to try and de-risk things as much as I can, especially nowadays when we're starting to deal with larger sums of money or going into joint ventures or partnerships and stuff like that. I like to have a plan, have an idea, have an understanding. I believe that by understanding your market and being professional and educating yourself and getting involved and getting advice when you need it, and knowing when to get advice or pause for a minute and try and get more opinions about something, it is trying to make taking a calculated risk, and that's effectively for me de-risking a transaction. So if one can get themselves educated and informed to make an informed decision and move forward and plan for the future and have a roadmap of targets, what they want to achieve, and few options. Sometimes things change, and write it all down, or speak to a mentor, or speak to another fellow investor to brainstorm your ideas. I think that's a good starting point and a way to keep moving. I always call my mates. There is other property fellow investors from around the country and discuss ideas or run few scenarios through them. That's the fun of it. That's what it's all about. We don't know everything about property, and again, networking and sharing and discussing information helps you to grow and helps you to make the right decisions.
Thanks, Hadar. That's a great note to finish on there. Hey, this has been a heck of an enjoyable 2 podcasts it'll end up being. And thanks so much for your time. If you want to get hold of Hadar, you can at propertygenie.co.nz or Hadar at propertygenie.co.nz, and he'll be wanting to talk over anything with you, I'm sure. So again, thank you very much for your time, Hadar. It's been a pleasure.
Pleasure. Thank you.
Well, this has been a terrific chat, and it is only one man's opinion at the end of the day, but Hadar has brought a lot of good points to many of you out there, I'm sure, about the property cycle, different times how he sees to buy and not to buy. Always remembering you make your money when you buy in any type of a market, and there are good times to buy through all parts of the market. You just have to have different strategies and what have you. So I'd like to thank Hadar again, and if any of you have any ideas that you would like to, or anyone you'd like to listen to on these podcasts, give me a email on mark@propertyventures.co.nz. Thanks, and have an awesome week.